Okay, so welcome to this session, which is the fifth of our bite-sized tax sessions, and this is going to feed into the recently launched Hassans Academy. You can find the earlier sessions which we did last year in on the Hassans YouTube channel. We did a session on exit tax, interest, corporate limitation, mismatches, and control foreign companies, which were all part of the Tax Avoidance Directive 2 provisions, which were introduced last year. But today we're going to go a little bit back to basics and talk about the principle of accrued in and derived from. So a little bit of housekeeping. I'm here on my own in the flat with a dog. If the dog goes mad barking at the door, I apologise profusely. I may have to pause for a second while I push her out. So also, if you could make sure you're all on mute. I think most of us now are, and I'm not hearing anything coming back the speakers, so that's good. And I suppose we should just crack on, because everybody wants to get their lunch. So let's do a little bit of introduction. So who am I? I think rather like Ben Elton in the 80s, I always say who I am. But I'm a partner with Hassans. I have approximately 20 years experience in Gibraltar. I'm an English qualified and a Gibraltar qualified solicitor, and I have the Chartered Institute of Taxes Advanced Diploma in International Taxation. I specialise in tax, both domestic and international, corporate and individual in Gib. And if anybody has any queries, anybody wants to run some thoughts past me, then please reach out. I'm happy to assist. The aims of today's session are for you to understand the importance of the concept of accrued in and derived from in our tax law, and to understand the meanings, what it means, as well as its importance under both the common law and Gibraltar statute, and to examine some practical examples of accrued and derived and some special cases within our legislation. It's always worth understanding some historical context to language in our Taxation Act, and this phrase accrued in and derived from in various different forms was standard language within post-war British Empire colonial income tax ordinances. Everybody who's old enough will remember that Gibraltar Acts used to be called ordinance. That's the standard language across colonies and territories of the British Empire and Commonwealth. And the Empire and Commonwealth took an approach which was an international taxation system before the existence of double taxation treaties and information exchange agreements and the EU and all those things that we now live with on a daily basis. But the Empire and Commonwealth had to resolve a method of taxing people in the right place. And the way that they did it was they had a central system. So the larger jurisdictions like the UK and the Dominions of Australia and Canada, they took a global approach to taxing residents. They taxed residents on their worldwide income and gains, and the territories, they took a territorial approach. So you can see that the central hub of the UK, and then if you travel out to the territories, you would be taxed on the basis of where you earned the money. So that it shows why we've got this territorial basis, and we can see this language and still in use in several jurisdictions. The Hong Kong Inland Revenue Ordinance of 1947 is almost exactly the same in this respect as ours. Section 4 of the Maltese Income Tax Act contains similar wording. Section 6 of the Ascension Island Income Tax Ordinance, the Falkland Islands Income Tax Ordinance, and the Singapore Income Tax Act use very, very similar language. Singapore is almost identical. And it still features in many other nations' tax base. So a standard method of approach to taxation is to tax your residents on their worldwide income and your non-residents on the income that they generate within your territory. So this language remains within a lot of the tax systems of the Commonwealth, defining that second territorial element for non-residents. And this means that there's a lot of cases that we can draw on for interpretation of the language. And that's really good because it means we've got solid understanding and it's been thought about a lot. There's nothing novel about this. You can go and find cases in several different countries and in the Privy Council and even to a certain extent in the House of Lords discussing source, which will help us interpreting the Gibraltar position. So not only is it historically consistent across the empire, we need to understand, or what's left with the Commonwealth and empire, we need to understand why this is a relevant concept in Gibraltar law. So it's relevant to almost all taxpayers in some ways. Gibraltar companies are taxed on an entirely territorial basis, with certain exemptions, but we'll talk about those later. Primarily, Gibraltar companies are taxed on the income from their trade, business, professional vocation, where the income in question is accrued in or derived from Gibraltar. That is the primary tax charge on corporations in Gib. And secondly, there are a number of income streams which are deemed to accrue and derive from Gibraltar if the company in question is registered in Gib. So that's intercompany interest, royalties, and non-trade income from movable property. They're contained in Schedule 1 of the Income Tax Act. Even with those three provisions, the form of accrued and derived is maintained, that the income is deemed to accrue and derive in Gib if the company is registered in Gib. Gibraltar resident individuals are charged to tax primarily on their worldwide basis, for their income from trade, business, professional vocation, but accrued and derived is relevant to them in certain circumstances where they receive a dividend from a company where the underlying income in the issuing company has been taxed in accordance with the Act, i.e. it is income which is accrued and derived from Gibraltar, then that individual will pay tax on that. And what they will do is they will pay their marginal rate, and then they will receive a credit for the 10% previously paid by the company. If that income is not accrued and derived in Gibraltar, the underlying company, then the individual will not pay tax on that income that he or she receives as a dividend. And finally, non-Gibraltar residents and individuals are also charged to tax on income from trade, business, professional vocation, where the income in question is accrued in or derived from Gibraltar. So they have a similar tax base to companies, sorry, not corporations. So that's why the concept of accrued and derived is important, and we should have a solid understanding of it if we're going to operate our tax system effectively. So what are the resources and cases that we refer to when we're thinking about the language accrued and derived? Well, Hong Kong is the source of many of the case law, or much of the case law on this language. They seem to have a very litigious business community when it comes to tax, or a very aggressive Inland Revenue Department. I'm not sure which, possibly both. The principal formulation of the interpretation of accrued and derived from features in Hang Seng Bank 1991. There are earlier cases going back to Whampoa Docks and Harbour and even further beyond that. But the modern baseline case for this is Hang Seng. It was developed in HKTVB, restated in Quang Mile Services, and then to a certain extent clarified in ING Bearing on matters of management and control. There is some very good guidance out there. We should obviously be looking at the Gibraltar guidance primarily. We have a set of guidance notes from the Commissioner of Income Tax, which was published in 2018. If that does not adequately cover the query that you have, then the Hong Kong Departmental Interpretation and Practice Notes, number 21 revised, is very good, and I would recommend that very strongly to anybody who wants to have an understanding of accrued and derived from outside GIB. It's very important for us to note that guidance is not binding. The Commissioner, the Inland Revenue Department in Hong Kong do not make law, and they do not interpret the Act definitively. The only people that can do that are the courts, but it's a good indicator of where the boundaries of what the Commissioner's approach will be. No guidance can be entirely comprehensive. It would take thousands of words and pages to cover all possible scenarios, and even then you would undoubtedly miss one. So the guidance is important, but it isn't binding, and it can be wrong, though it's a very strong indicator of the approach that the tax authorities will take. So let's look at the common law definition of accrued and derived. And for the sake of argument, for the sake of clarity even, I've taken the definition of this language from Hang Seng as the landmark case on this matter. The judge, his name was Bridge, Justice Bridge, divides his description of the effect of accrued and derived from language into two parts. First of all, talks about active income, and then he talks about passive income. So we'll quickly read through those. On active income, he says the question whether the gross profit resulting from a particular transaction arose in or derived from one place or another is always in the last analysis a question of fact, depending on the nature of the transaction. It is impossible to lay down precise rules of law by which the answer to that question is to be determined. The broad guiding principle attested by many authorities is that one looks to see what the taxpayer has done to earn the profit in question, end quote. Now, obviously, for those of us who are not lawyers, the fact that he says precise rules of law cannot be laid down, and it's impossible, is sort of like, oh, lawyers, again, lots of woolly words. But it's important that we understand that courts cannot make rules which cover every single possible scenario in business. So what instead they do is they give us a general principle that we can then apply. And the general principle is just look at what's happened and where has it happened. What has been done? So that is the active element of the transaction. That the location of that is where the income accrues and derives. Almost a shorthand would be to say, where is the labor? So let's imagine we decide to dig a hole. We dig holes for our business. We send a man to Italy to dig a hole. He digs a hole in Italy. We charge somebody in Italy for it. The hole has been dug in Italy. Therefore, the doing is the digging of the hole. That's the service that we're providing. He has done it in Italy. Therefore, it is accrued and derived in Italy. No income accrued and derived in Gibraltar. Therefore, hole digging income is out of scope of the Income Tax Act for us. Now, on to passive income. This is slightly trickier. Justice Bridge says, if the profit was earned by the exploitation of property assets, such as by letting property, lending money, or dealing in commodities or securities by buying and selling at a profit, the profit will have arisen in or derived from the place where the property was let, the money was lent, or the contracts of purchase and sale were effected, end quote. So In this element, he's talking about the location of the asset that we're exploiting. He's not talking about what we've done. He's talking about where is the asset. I think possibly when he's talking about contracts of purchase and sale being affected, he's probably more actually talking about what has been done. The contract has been done in that place, and that goes to the accrual and derivation of income arising from assets traded on an exchange. So if we rent a property out, Bridge is telling us that the property is the location of the property is the source of the income. If we lend money, then where the loan is made, and if we deal in commodities or securities, then it's the location of the exchange where the dealing occurs. And that's really interesting. I know that we often in Gibraltar view trades as capital gains on regulated exchanges, but there are cases in which they can be income, quite rare, more like day trading. That can be income, but that's income's being generated on the exchange. It's not being generated in the place where the man presses the button to send the order to the exchange, as far as the common law definition is concerned, at least. So now let's have a quick look at the Gibraltar statutory definition, which you'll find in section 74 of the Income Tax Act. And this definition is taken into the charging provisions in section 11, which says some companies will be charged when they accrue and derive in Gibraltar. So all companies will be charged when they accrue and derive in Gibraltar. Sorry. So the definition is, quote, accrued in and derived from shall, A, be defined by reference to the location of the activities which give rise to the profits. That is the definition of accrued and derived. And then in B, we have a deeming provision, which looks at licensing and regulation. So for the purposes of A, the activities which give rise to the profits of the business shall be deemed to take place in Gibraltar in the case of a business whose underlying activity that results in the income requires a license and regulation under any law of Gibraltar. Now, we have lots of licensing and regulatory regimes in Gibraltar. Generally, that provision is taken to mean things like financial services regulation, gaming regulation, and matters like that. It is not generally taken to mean a general business license. Every business that operates in Gibraltar requires a business license. And I don't think that the intention of Parliament was to drag every business into tax and entirely undermine the territorial regime. So that is a given within the profession, that we don't mean general business licensing there. B2 means a business transacted in Gibraltar through a branch or any form of permanent establishment by virtue of the fact that it is licensed in another jurisdiction which enjoys passporting rights into Gibraltar and which would otherwise require such a license and regulation in Gibraltar. So that is entities which trade into Gibraltar through branches, and that, again, the extended reference to passporting rights and regulation and license indicates that B1 is actually aimed at such things as financial services licensing rather than a general business license regime. C is a carve out for Gibraltar entities which are passporting out. So we have A, general definition, B, a deeming provision, C, a carve out from the deeming provision. Now, are these two definitions, the one that we find in the common law and the one that we find in the Income Tax Act, entirely linguistically identical on a simple reading without any context? Well, not entirely. Section 74 of the Income Tax Act simply talks about the location of the activities which give rise to the profits. It does not, as we noticed in Hang Seng, go to passive income in the same explicit way. However, when we look at the guidance notes which were issued in 2010, when the Income Tax Act came out, and we look at Hansard, it's clear that the intention of Parliament was that the Section 74 would essentially be a codification of the common law rule in Hang Seng. And when we look at the guidance, we will also see in the Gibraltar guidance, paragraphs 32 and 33, that the Commissioner indicates that he will follow the position taken by Lord Bridge in Hang Seng on passive income as a special circumstance. It's quite interesting that he takes the time to explain that to us, but that's his approach. That Section 74 is essentially a codification of Hang Seng. That's it. And an overly literal approach. He clearly doesn't want to undermine the intention of Parliament, and I don't think he should, on an overly literal approach. In paragraphs 23 and 24, the Commissioner indicates that he accepts the twofold characterisation of Lord Bridge in Hang Seng of profits of a trade, business, profession or vocation, which arise from the location of the business, but also the fact that income can arise passively from a location of an asset, from the location of an asset. So that's good and solid and clear, and I think it's the correct approach. Hong Kong, which isn't dealing with its statutory definition, because its statutory definition it doesn't have a statutory definition like ours does. It looks straight to the case law, but that indicates that they follow a policy in line with Lord Bridge, and gives a list which you may find very useful. It's actually very, very useful. At paragraph 45, there's a list and a table of assets and where the Hong Kong revenue feel that the income would be accrued and derived, and that's a really good starting point. Obviously, it's not binding on our Commissioner, and it's not binding on us, though it would, I think it would definitely be influential. So you may find that useful. I'm sure people are going to ask me for a link to this Hong Kong guidance. If you just Google the name Hong Kong Inland Revenue Note 21, or whatever the full name is, then it will come up as one of the top results. There's quite a lot of guidance in Hong Kong on this matter. So I think that's clear. Accrued and derived is entirely central to the tax system in Gibraltar, and we now understand the meanings of the words. But what is and what is not a trigger for income to be accrued and derived? Worth reiterating. So what is the carrying out in Gibraltar of activity which gives rise to the income being generated. Exploitation of an asset which is physically located in Gibraltar. Those two things. What it is not the making of a decision to undertake a course of action somewhere else. And it is not the administration of an asset where such administration doesn't generate income. I want us to think very narrowly now. I don't want us to think about fiduciaries administering other people's assets or investment managers administering other people's assets. I want to think about a company which is administering an asset, say it's located in France. They have a back office team here. They put things in files. They raise invoices. That is all admin. That is not income generated. It occurs where the asset is, in accordance with Lord Bridge's position in Hang Seng. And second, and primarily, the making of a decision to undertake a course of action somewhere else, that is also not enough to make that activity accrued and derived in Gibraltar. The location of the board is not the location necessarily of the accrual and derivation of the income. How do we know? Why am I so strong that location of the board is not relevant to the location of the accrual and derivation of the income? Because in ING bearing, Ribeiro PG dismisses what he calls the brain analogy. And let's talk about what the brain analogy is now. The brain analogy can be summed up in this sentence, which is my sentence. I know I've put it in inverted commas, but it's my sentence. The activity could not occur without the decision being made to carry out that activity. Without that, there is no income. Therefore, the income is accrued and derived where the decision is made to undertake the activity. That is wrong. The decision to make the to undertake the activity is an antecedent decision to the income generating activity. It is not part of the income generation. As anybody who's ever worked in operations knows, there are two kinds of people that claim all the responsibility for their income. The bosses, they're the people making this, and the salesman. The guy that actually, to go back to our hole digging example, the guy that digs the hole is the one that generates the income, not the person that sells the hole digging, and not the person that decides to dig holes for a living. So it's important to understand that, because it is something that we see, and I've spoken to several of the tax advisors around this, where people confuse the concept of management and control and the concept of accrued and derived. Management and control is relevant to the tax residence of the company. Gibraltar does not tax companies based on their tax residence. It only taxes companies based on where their income is accrued and derived, or where they are registered and had a knock-on for accrued and derived in those three cases that I gave you as an example before. So this is important to remember. I have seen pieces of advice where there's been long discussions about tax residence, and then somebody has basically drawn the brain analogy. It is not correct. The fact that something is not carried out in Gibraltar, but we want it to be taxable, so we make the argument that the board are making decisions, and therefore without those decisions there could not be an activity, there could not be income. That is not, it is a fallacious argument, and the case law shows us that it's a fallacious argument. So now let's look at our special cases. The form of the three special cases is the same, so I'm going to use class 3A because that has the shortest language. This is the taxation of royalties provision in the Income Tax Act, and it says, subject to B below, royalties received or receivable by a company, and we can put in brackets there, will be taxed. And B says, for the purposes of A, royalties will be deemed to accrue and derive in Gibraltar, where the company in receipt of the royalty is a company registered in Gibraltar. That's important. What's important to remember about that is that not makes companies registered in Gibraltar subject to tax under class 3A. What it says is royalty income accrued and derived in Gibraltar is taxable in Gibraltar, but also royalty income accrued and royalty income earned by a company in Gibraltar, registered in Gibraltar, will be deemed to be accrued and derived in Gibraltar. So it is possible for a company to not registered in Gibraltar to accrue and derive its income in GIB. Also the same form for intercompany interest income, and the same form for non-trade income from movable property. It would probably be more relevant to intercompany interest income than royalties, because we don't have fully developed patent office and IP regime. But it's important to remember, this is not only about registration. If the company is not registered in Gibraltar, it doesn't allow you as a tax advisor to just turn your brain off and say, okay, that's out of scope. It may well, probably not going to be, but you still need to do an analysis. So here are the conclusions of the session. Accrued and derived is not a uniquely Gibraltarian concept, and that's good because it places us within a solid tradition which is global and is well understood by the international financial system. Income is accrued and derived where the labour or the activity occurs, which is being charged for, which is the income generating activity. Passive income is treated as if it accrues and derives where the asset is located or where the contract is struck, and that means on the relevant exchange. In the case of shares or traded investments, I would go for crypto in that position. I would talk about options, CFDs, all things like that. And we can talk around, if we want, on another session, if people want to, please feel free to send me an email asking me for sessions. That's good. We can talk around when things are capital gains and when things are income in that specific Gibraltar-based position if you want. And finally, the location of the board is generally not an indication of the accrual and derivation of the income. There is one example where that's probably not correct or slightly confused, where you have the board of a fiduciary company. Let's say you have a licensed director, a corporate director, and its board meets, but it takes decisions as a director of another company. So if it was Grahame Directors Limited acting as director of I don't know, Fish Market Lane Properties Limited, then where that board is meeting is relevant to accrued and derived, because the service that's being provided, the activity which is being provided, is the taking of board decisions. So that would be relevant. Apart from in that one example, I can't think of anything which is tied closely to where the board is. If there are indicators, well, there are indicators that there is another activity which is occurring elsewhere. Okay, so thank you very much for listening. I hope that was clear. We got 73 participants in the end. I'm sure there will be questions, or there may not be. Feel free to ask questions. We have the queue. We have a chat session down there, so please feel free. Or if you want to, ask a question out loud. Silence. Okay. Right. Well, you can all go and have your lunch now. If you weren't, all the people on mute with no camera on are probably already having lunch. It's been very nice to see you. We'll do another one. It was a good turnout. Thank you very much. I'm sure we'll do others. Please feel free to email me questions if you have any questions. Oh, thank you very much, David One On, for saying thank you. Please feel free to email me questions if you would rather do it that way. I'm happy to answer them. And speak soon.